Okay, so good evening, guys, and welcome to yet another session. As usual, it's always nice having you guys on these weekly sessions where we pick one topic, discuss, and then try to like see how we can get better with our trading. Yeah. So for today's class, just like how I've already dropped it out there, yeah. What we're going to be looking at today is more or less how to set our stop loss and then take profit levels on our charts. I think when I was looking for the topic to actually talk about this week. I think I was thinking of talking about different things. Top-down analysis was among one of them. But then one of the thing that's I think one thing that actually like made me to like choose this one was because personally one of the things that I lost money on, or one of the reasons why I lost a lot of money when I first started trading was that whole idea of not knowing where exactly to drop like your stop loss. So if I analyze this chart, let's say I decide to this gold right now, I decide to like buy it. Let's say I decide to buy at this level. The question in my mind would be like, okay, where do I drop my stop loss? Because to a certain level, I want a tight stop loss. I want like a 25 pip stop loss. Do you understand? Or a 20 pip stop loss. Now, if I drop a 20 pip stop loss, price might come back to take me out. Do you understand? Those are like the questions on my mind. And then I'll be like, okay, what if we make it wider? Do you get? And then you now start asking yourself, how much is enough? Do you understand? And then you don't want that whole situation whereby you enter a trade and then price comes back to reverse, take you out, and then go back in profits. Do you understand? So all those things were more or less questions that I faced. And then most times you're inside this whole circle, not really a circle, but then inside this whole, you find yourself in this dilemma where you have trade paralysis because you cannot make decisions. Do you understand? Because of all these problems, you end up not making decisions, and then trades tend to like play out in the direction you are expecting, or even enter the trades, and then they more or less take you out and then you end up in a loss. That's just the stop loss aspect. The take profit aspect is that whole one. In short, most of us have experienced this thing where we enter a trade, we place a trade, we drop our take profits, and then price doesn't get to that take profit level and then comes back to take us out. Or price goes in our favor, like we make like, let's say you enter a trade with a $10 account and then your equity is running like $30, and then you end up even losing on the trade. Do you understand? So you keep wondering, okay, where is that point where I set my take profits? Do you understand? And at the same time, you don't want to set your take profit at a level where price will come and then tap and then pass it. And then you see that, oh, I for no commot or I for hold them longer. Do you understand? All those things are questions that we all faced. Do you understand? Everybody went through this thing. Do you get? So that's why I said, okay, this is something we can discuss. And then most times we just say, oh, I'll be putting a 10 pip stop loss, target 20 pips so that I get a 1 to 2 RR. But then we really don't know why we're dropping, or how we should set our stop loss should be why. It's more or less like, instead of doing, oh, I want a 10 pip stop loss, you should be looking at setting it at a level where it's more or less optimal. It's not big, it's not small. At the same time, it's a level where if price takes you, or price cannot easily take you out, that sort of stuff. Do you understand? So we're going to be looking at how to set our take profit stop loss and then why we set them at those levels. Do you understand? Now, aside people that use, let's say, something like Fibonacci retracement. Fibonacci retracement on its own stipulates where you should drop your stop loss and then take profit. Aside that, every other person, anybody trading things like other blocks, support and resistance, trend lines to a certain level too, you can use these systems. Hope you guys are getting it. You can use these systems. Do you get? So that's what we're going to be looking at today. So without further ado, let's jump into it and then look at it. Please, at the same time, if you're having, or if you have any issues, or if you have any questions, you can just write them down. Once we finish, we'll do a questions and answer sessions. Yeah, you don't look at everything. Make sure that this session actually improves your trading to a certain level. Yeah. So let's get started. So, like I said, we're looking at how to place our stop loss take profit. Now, the ideal topic, or the topic, is more or less entries and entry confirmations. But then we're going to focus on the entries aspect. Do you understand? Entries and exits. So, one sec, let me write that down. Entries and exits. So, first of all, we'll look at the whole entries aspect. So, when it comes to entries, yeah, we're more or less looking at, if I have, let's say, this is more or less an uptrend. Do you understand? This is more or less an uptrend. And then we're looking to buy it somewhere. Let's say we're looking to buy at this whole level here. If I use this whole level of support onto resistance, sometimes it tends to seem like, oh, I am playing you guys handicap. Let's use something like an order block. Let's say we're entering at the order block down here. You understand? We're looking at price coming back to tap that whole order block and then reverse to the upside. Do you understand? Now, once price gets to this level, the question now changes to, okay, how do I execute this trade? Do you understand? Am I looking for any confirmations? Or even if I'm not looking for any confirmations, how do I react? If I jump on it, where do I drop my stop loss? Where do I drop my take profits? Now, when it comes to how you react or how you jump on it, we have two types of entries in the markets. Do you understand? Every trader out there either enters their trades aggressively or conservatively. So we have aggressive entries and conservative entries. And then conservative entries. So we're going to start with aggressive entries. We'll look at what aggressive entries are. When we jump on the trades, how do you drop our stop loss, take profits? So when it comes to aggressive entries, yeah, once price taps your area of interest or once price taps that level where you want to enter your trade or that entry point, you are entering the trade or you're jumping on the trade without any questions asked. You're jumping on the trade without any extra information. So the fact that this is more or less an uptrend, price has created a higher high, you're looking at price creating a higher low here and reversing to the upside is enough for you. Do you understand? No other questions asked. Once price gets here, you're executing your trade. You're going to your MetaTrader to press buy. Do you understand? That's more or less your entry. But then, like I've already established or stressed on, your entry is not enough. You need your exits also. So if we jump on this trade here, where do we drop our stop loss? Now, the general rule for dropping your stop loss here, or the general rule for setting your stop loss is more or less at a level where once price gets to, the setup is invalidated. I like calling those levels safe zones. So if you look at this chart now, or let's just stop this one and then look at the whole idea of market structure. If you look at market structure, when we talk about uptrends and downtrends, if you look at an uptrend where we're having series of higher highs and higher lows, whenever price creates a higher high or creates a high and then goes down, fails to create a higher low and breaks the previous higher low to the downside, it's more or less a shift in market structure, which means this setup is more or less invalidated. So this trend is changing to another trend. Do you understand? Then for a downtrend, it's more or less the opposite. Whenever you're having series of lower lows, lower highs, lower low, price fails to create another lower high and breaks above the previous lower high. That whole case now is more or less a shift in market structure. The market is changing to another trend. So it's more or less that thing that we're going to apply here right now. So this uptrend now, where is the level that once price crosses, this whole buy setup is invalidated, is the previous higher low. That's this level here. Now I'm going to draw a line at that level. It's around here. So once price crosses this level now, this trend is more or less changing. So there's no need for me to look for buy opportunities. Now, how does this, or how do we use this to set our stop loss? Now, when you take a buy at this level now, you more or less put your stop loss a few pips below this level. That's below this whole higher low level. Now, why are we setting our stop loss here? Or what's the implication of setting our stop loss here? Once price comes to this level and then fails to react at this place we want to buy, and then crosses it and then comes to take out our stop loss, price is not just taking any other stop loss, it's also invalidating the whole setup. So instead of price taking us out and we're like, oh, the market is still an uptrend, let me look for another buy opportunity. Once price takes you out, in this case, you're not looking for any other buy opportunity. Are you guys getting the idea? You're not looking for any other buy opportunity. This is more or less enough. So what you're going to be looking at now is more or less what trend price will change into next. Are you guys getting the idea? So your stop loss is more or less going to be a few pips below the higher low or below the previous higher low when you're looking to buy. Your take profit is more or less going to be, the rule for take profit now is more or less the next zone in the direction of that trade. So the next zone or the next area of interest in the direction of this trade is more or less our next higher or our previous higher high. Do you understand? That's the previous resistance level. So if we buy from here and then price starts going up, this is the next best place that has a potential to make price reverse, or this is the only place that has a potential to make price react. So once price starts approaching here, we're more or less looking to take our profits before price gets that opportunity to reverse. Are you guys getting the idea? So far, do you guys
Yes,
have any
sir.
questions? If you guys have, please let me. You guys can drop emojis in the comments or the chat box so that I know I'm
Yes,
not talking
sir.
to myself.
Yes, sir.
Okay, good, good, good. So, one sec. Let me show you guys another illustration. So, for people that use things like, why Jerry did drop laughing emoji? So, when we have things like, okay, in a situation where we have this same uptrend, but then we're looking to buy at this whole resistance term support, that's this whole flip zone here. We got our resistance level. Price broke above. We were looking at price coming back to tap that level before we buy. Once price taps this level, for aggressive entries, we are going to execute the trade without asking any questions, no confirmations. Do you understand? Now, if we execute that trade, we know that price could actually pass this level. And as long as it's still above this higher low, there's a potential that price could reverse and then go to the upside. So where do we drop our stop loss in this case? Our stop loss is still going to be a few pips below the higher low, which is somewhere around here. This is where our stop loss is going to be. Let me write SL there. SL. And then our take profit is going to be at this whole resistance level here. That's where our take profit is going to be. Same thing with this one. It's just the entries that changed. Do you guys get the idea, or are you guys getting the idea? So our take profit is going to be up here. CP. Now, let's look at this more or less for an uptrend scenario where we're looking to buy. Now, let's look at a downtrend scenario. When we look at, after looking at this downtrend scenario, we're going to jump on our charts and then look at some chart examples. Hope I'm not rushing it.
No, sir.
Okay. So, one sec, downtrend. So a downtrend is more or less when we're having series of lower lows, lower highs, lower lows. So in this case now, we're more or less looking to sell, but then we're waiting for price to retrace first before we sell. So we're looking at price retracing back up, stopping somewhere, and then we sell. So let's say we decide to sell at this point here. I don't know what zone is this, but then let's just call that level a zone here. Let's say we're looking at price tapping that level and then reversing. Now, once price gets to this level, if we're entering aggressively or when entering aggressively, we are going to jump on the trade automatically, no questions asked. But are we getting enough ratio? Okay, the answer to that question is more or less most times when it comes to all the time when it comes to aggressive entries, just follow the rules. Do you understand? We have conservative entries. If you're looking at getting tighter stop loss and then nice ratios, it's under conservative entries. So I think that's just it for now. But I'll talk about it deeply subsequently. So now, once price goes back to this level and taps this level, we're going to be looking to execute our sell. Now, once we sell here, where is that level where we're going to drop our stop loss? It's a few pips above the lower high. Now, why are we dropping it a few pips above the lower high? That's somewhere around here. So that's our stop loss SL. Now, why we're dropping our stop loss here is because if price doesn't react at this level, we're looking to sell at and then goes up to break above this stop loss level, it means the market is more or less changing to another trend. So we should stop looking for sell opportunities. So even if we're looking to sell, we'll stop looking for sells. Do you guys understand? Now, what if we get the whole sell and then price starts going to the downside? At what point do we take our profits? It's more or less going to be the next zone in the direction of that trade, which is what the next support level down here. So we'll be looking to exit our trade at this level. Why? Because once price starts approaching here, there's a potential that price could reverse toward the upside. So we're looking to exit before any potential reversal. Are you guys getting the idea?
Yes, sir.
Good. So now let's jump on our charts and then take a couple of examples. That's both buy and then sell examples. So, uh, this is gold currently. Come in a second, let me refresh this page. Can you guys see my charts at all?
Yes, yes.
We
Yes,
can see it.
yes,
Okay, so
yes, we are seeing clearly.
if you look at this chart, you see that price was more or less pushing to the downside. And then after that, we created like this lower high. Failure to create a lower low, broke above and started creating like higher high, higher low, then another higher high.
Yes, sir.
Do you understand? So I'm more or less looking to buy in this case. So the potential level where we can buy from is more or less this whole resistance level here that was broken to the upside. We can more or less look at price coming back to tap this level, and then we'll look to buy from here and then follow price movement to the upside, something like this. So it's more or less to wait for price to tap there. Now, this red candlestick more or less taps into that level. Do you get? So we'll be looking to execute our trade from that level. We'll be looking to buy at that level. So if we're looking to buy here, where do we drop our stop loss? Our stop loss is going to be a few pips below the previous higher low. So that's going to be around here. Our stop loss is going to be a few pips below here, something like this. Don't put it exactly at the higher low because price might come and then wick it before going back up. Say a few pips might be 1 or 2 pips or even 3 pips, but anything above 4 pips is how will I put it? Not irrelevant. There's this word I'm looking to use. The word is coming to my head, but I'm forgetting it. Just know that it's too much. So now we're looking to more or less put our stop loss here. So, like I said, why is because once price cross this level now, this market is more or less changing to another trend. Do you understand? Now, our entry is gonna be here. Stop loss a few pips below here, so something like this, and then we're going to target the next high, which is up here. This is what our setup is going to look like. Yes, someone said that the risk reward is going to be very, very slim because this one is a 1.82. So what that means is if I risk $100 for this trade, I'm just going to make 182. Which is it's not bad for someone with a high no worries, I'm going to talk about the pros and cons actually. What are the rules for the aggressive entries like this? I don't mention I didn't say that. Okay, I said the rules are first is when you're entering into aggressive entries, yeah, you're not looking for any extra confirmation. When you jump on it, your stop loss is going to be at the level where once price gets to, the setup is invalidated. The take profit is going to be in the next zone in the direction of that trade. So in this case now, stop loss was a few pips below the higher low because once price gets there, the setup is invalidated. Take profit, on the other hand, is more or less in the direction of that trade. Do you understand? We're looking at taking profits at the high. So sorry, we're looking at taking profit at the last high or the more or less previous high. Why? Because once price gets to that level now, there's a potential to reverse at that resistance level. Do you understand? That's more or less it. So if we look at this trade, how it played out, price got back into the zone. It went deeper before starting to push up proper. Now, see this our take profit level. You can see that immediately price tapped there. We got like a rejection candlestick. Let's see if it actually broke it without any resistance. And then you can see that as it passed it, rejection started. Now, this thing is because most times that's where everybody wants to take profits. And if you're not careful, that's where people start mounting sales too. So that's why I'm looking to exit from that place. Do you guys understand this whole thing? Do you guys get the idea of why we're entering and then why we're dropping our stop loss and take profit at these levels?
Very much, very much.
Yes, sir.
Okay, let's look at another example. Okay. This one too was an uptrend. You have a lot of uptrends here that I think gold has been very, very, how will I put it? Very, very sweet with uptrends this year.
But the market have not been volatile now.
Really, it has been volatile. So it's certain, no, it's just this past week that it has been doing like a sort of like a range. But then throughout this year, it has
Yes.
been great actually. I think I have more winning trades on gold this year than any other currency pair. NZD USD and AUD they have not even had any winning trade on it. So let's look at this. We got an uptrend here, and then we're looking to buy at this whole resistance stone support. So I'm looking at price coming back, tapping this level, and then we buy, and then look at price going back to the upside. So let's see how it behaved. So at the top of this level, we're looking to buy. Now, this is another thing that is interesting. This is one problem with aggressive entry. So you can see that we jumped on it. Stop loss now is supposed to be so slightly below here. Do you understand? Now you can see that price passed that zone, but because our stop loss is below this higher low now, it did not take us out. Do you understand? And if price actually took us out, it would mean that this setup is more or less invalidated. Do you understand? Then our take profit is going to be up here. We're going to target up here. This one is more or less a 1.5 RR. So if I risk anything, I'm going to get 1.5 of it. So something like this, price go up. Something like this. Let's look for a sell example and then use. Price no one go up. COVID. Do you guys get the idea? So let's look for a sell example. Yeah, let's see. Okay, got one here. So if you look at this market, you see that currently, or for a minute or for a while, it actually shifted to a downtrend. So the downtrend just started here after price created this low that was lower than the previous higher low, and then we created more or less lower low, lower high, then another lower low. Do you understand? So in this case now, price basically created a level where we can jump on our trade slightly around here. This support turns to resistance here. So we're more or less looking at price going back to tap this level. Now, please, I'm using most examples I'm using here are more or less support onto resistance examples. But then this can work even with other blocks. So if you're using to use other blocks to jump on this trade now, you still drop your stop loss slightly above that whole lower high and then target the next lower low. Do you understand? In that case, you're even going to have a better risk reward ratio. Do you understand? You can use basic support and resistance also. The only time this will not actually work, or this rule should not imply is when you're using things like Fibonacci, because Fibonacci has its own rules for entry and then exits. Do you understand? So in this case now, we're looking at price going back up to tap this level and then we sell to the downside. Do you understand? Now, once price gets there, let's wait for price to get there. Once price gets there, we're looking to execute our sell. Do you understand? So execute our sell here, stop loss slightly above the lower high, and then we target the next lower low or the previous lower low, something like this. This one too is a 1.5 risk reward. So price goes in our direction, or we wait for price to more or less go in our direction. Good, something like this. Are you guys getting the idea? Now you can see that immediately price tapped our take profit level, we started rejecting to the upside. That's why we're looking to take profit at those levels, because those are the potential levels where people first of all exit their trades, or if people want to mount sales now, that's where they'll start like loading sales into the market. Are you guys getting the idea? Do you guys understand?
Yes, sir.
Good. So that's basically it when it comes to aggressive entries. The next thing we're supposed to talk about is more or less conservative entries. Do you understand? I'm coming.